Have you ever been shocked by your tax bill? I'm going to show you how to avoid that going forward in today's episode of The Profit Pillar Show. I'm your host, Parker Stevenson, CEO of the accounting firm Evolve Finance and author of the book Profit Pillars. Now, an unexpected tax bill doesn't have to be a massive bill for it to be shocking or surprising, right? So much of tax preparation is in the second word. Preparation. Are you prepared to know what you owe for your tax bill at the end of the year? And as a business owner, this is a really big deal because when you work for someone else and you're a W-2 employee, taxes get taken out and you don't really have a lot of work to do at the end of the year to file your taxes. And there's usually not a lot of big surprises unless you have a lot going on, which probably means you're a high earner anyways. But when you're a business owner, it doesn't matter how big your business is. If you don't understand how taxes work, or you're not prepared for your tax bill, or you're not doing any tax planning, especially as your business grows, then it doesn't take much to surprise you. And before we started doing tax returns for our clients at Evolve Finance, and we were just a bookkeeping firm, we saw a lot of our clients really struggle with their accountants to feel like they prepared them for what to owe in taxes. Now, I am a big proponent for personal responsibility as a business owner. It is your job to be ready for your tax bill, whatever it's going to be, but your accountant is supposed to make it easier, right? And if you hire the right accountant and have the right accounting support, then there really shouldn't be any big surprises, especially you shouldn't be learning what your tax bill is going to be only at the start of the year when it's time to start filing your tax returns, both personally and for your business. So if you have ever been in a position where you feel like, whoa, I was not expecting this tax bill, well, then there's probably 3 reasons why you were put in that situation. And this is common for a lot of businesses that are getting into the higher 6-figure and 7-figure range. But the first reason you might have been put in this situation is you just didn't track your finances well. So if you don't have good bookkeeping in place to track your profitability, then you're not going to have a grasp of what you owe in terms of your tax bill. So it could be bad or non-existent books, right? Maybe you're hiring a budget bookkeeper, they're doing a bad job, they mess something up, and you're like, wow, well, that profit wasn't right. So once you fix it at the end of the year, you'll suddenly realize you have a big tax bill. Or maybe you just don't have any bookkeeping at all. You're waiting until the end of the year to try to get your books together, which is even harder because you have even less visibility throughout the year and even less time to prep for what you might owe. Now, you might have good bookkeeping, but also if you're not looking at your books, if you're just not paying attention to your finances throughout the year, that's also a problem. One of the things we do at Evolve Finance is we give our clients a monthly dashboard, and part of that dashboard is an estimate of what their quarterly or what their yearly tax bill might look like based on what tax bracket they're in. And we give them a few options so they can estimate throughout the year, regardless of whatever work they're doing with their accountant, whether it's with our tax team or an external tax team. But if you're not looking at your books, right? If our clients just ignored everything we did from a bookkeeping standpoint, then they're not going to be prepared for their tax bill, even though the data is there ready to show them like, hey, this is roughly what you owe. Make sure you're saving this amount. And also you just didn't get what your bookkeeper needed, right? Maybe your bookkeeper was trying to do everything they could to give you the financial reports you need and the financial insight you need to plan for your tax bill. But if you just weren't helping them log into to your bank accounts and connect them to your bookkeeping software, or if you're not getting back to them on what we would call needs info transactions, so the transactions that need more information from the business owner for us to know where to categorize them. If you're not supporting your bookkeeper from that standpoint, then you're just not going to get any financial reports, and you're not going to be able to plan for taxes. So tracking your finances well is so important. And if you're just not doing it or not paying attention, you're probably not going to have any idea what you're going to owe in taxes. Now, if you're working with an accountant that simply waited until February to start pulling your information from your business and from your personal finances, then of course you're not going to save much in taxes. And of course you're not going to feel very prepared for your tax bill, because if you only pay for tax compliance, and tax compliance is the process of filing your tax returns for state and fed, and even sometimes there's city-based taxes. That's all compliance-based. That's just getting your taxes filed. But by the time February comes around, there's not a lot your accountant can do to save you money on taxes. I think as business owners, sometimes we just hope that maybe if they just check the right box on a tax form, then that'll save me $10,000 on my taxes. But any experienced business owner will tell you, for instance, one of the most common tax strategies small business owners can put into place once their businesses get big enough is the S Corp strategy. Well, setting up your S Corp really is just clicking or checking a box, right? If you're an LLC and now you want to file your taxes as an S Corp, your accountant does just fill a box. But what takes time is setting up your payroll, doing the calculations for what a reasonable compensation is for you as the business owner while you're running payroll, and all that stuff, depending on how on the ball you are, could take months. We've seen business owners definitely drag their feet to get this kind of stuff done. But if you do the work in the summer and your S Corp is set up, like all of the payroll stuff is set up, and you've been paying yourself a certain amount of payroll throughout the year, it could mean the difference between saving, maybe $4 or $5 or tens of thousands of dollars, depending on how big your business is. But that's not something your accountant can just do at the end of the year, especially during their busiest time of the year. And there's deadlines too for when you're allowed to elect S Corp status for that tax year. So there are deadlines to hit there too. So again, if your accountant is just the type of accountant that goes, all right, give me all your documents in January or February and we'll file your taxes, then you are going to be hit with a pretty big tax bill because your accountant's not really being given the opportunity to do anything to help you save money on taxes, or you're working with an accountant that just doesn't do any tax planning or tax strategy work. So you're essentially paying them to do exactly what they said they're going to do, file your tax return, but that's different than working with you to figure out how to reduce your tax bill. And that leads us to our third point here. If you're doing no tax planning at all and your accountant's waiting until the end of the year, then there's only so much you can expect to save in taxes, because some business owners do a little bit of tax planning themselves. They do some research, look some things up, but typically you need an accountant that offers tax planning services. There are some accountants that, if you have a good relationship with them, kind of hit them up at the right time, ask the right question at the right time, they'll go, oh yeah, well, why don't you do this, or this? And then that'll help you save some money in taxes. But then you're left to go figure the rest out and go execute on it and make the tax strategies come to fruition in your business. But tax planning is truly about planning ahead. And so the best time of year for us to do tax planning with new or existing clients is usually the summer into the fall. That's when some of the best tax strategies can be put into place. And if you're not talking to your accountant until February, well, then you're missing out on some of the best opportunities to save money on taxes, especially if you're a high six or a seven-figure online business. But again, I just want to emphasize here, most tax strategies aren't strategies that you can just put into place in December or even November. A lot of these things need to be done earlier in the year to give both you and your accounting team the time necessary to put these strategies into place. But it can mean the difference. It can make a difference of hundreds of thousands of dollars over the course of your business's lifetime, if not into the seven-figure range if you are running a seven-figure business. So we've been able to save our larger clients tens of thousands of dollars in taxes every single year, which adds up pretty quickly if your business has lasted a long time. So if you didn't track your finances well, if you're working with an accountant that only does tax compliance, which is doing your tax returns, and you did little to no tax planning throughout the year, like during summer and fall, then it shouldn't be any surprise why you were surprised by a big tax bill where you're just like, whoa, why didn't anybody tell me my taxes were going to be this big? Now, granted, it probably meant you also had a really good year. Your business grew a lot, but this is why up-leveling your accounting team, having good bookkeeping, having an accountant that's proactive, doing tax planning throughout the year, upgrading that level of service you get from your accountant is really important, because you never know when each year you're going to grow significantly, right? You don't know or you can't always predict when you're going to have a big year where your business takes that next step. So having an accounting team that can support you with that is really important, both on the bookkeeping and tax prep and tax planning sides of accounting. So if your business generated 6 figures in profit this year, I don't care if it's $100,000 all the way up to $1 million in profit or more, then you should never be surprised by a big tax bill. You really shouldn't. And so here's what you can do to prepare for that. So number one, take your bookkeeping seriously. It's not just for financial analysis purposes, right? It's really good, right? You want to know what your profitability is. You want to know what your expenses are. But most business owners think about bookkeeping as, well, I just need books so my accountant can file my taxes. So doing some financial analysis on your business throughout the year is obviously really beneficial. But the most important metric on a P&L is the number at the bottom, the net income, the profitability. That's a really important number. And if that number can be trusted, right? If your bookkeeper is keeping up with your books on a monthly basis, they're reconciling every single month, and they're categorizing your transactions properly, then you should be able to have a really good idea of how much profit your business is generating. And if you know, if you have a really good idea of what your profit, or where your profitability of your business is throughout the year, then you should be able to estimate your taxes pretty easily. Now, that's something your accountant can help you with, especially if you have a spouse that has a business or has a high income, or you have other stuff going on personally that will affect your tax bill. Then you definitely want to be working with an accountant that can kind of help keep you up to speed on where your tax bill might be landing. But your accountant can only do that, especially if your business is your primary form of income. Your accountant can only help you with planning for taxes if they know how well your business is doing and what your profitability is. And again, knowing your profitability is really important for keeping your business stable and growing in a sustainable way. But also, it's really important for your accountant to file your taxes. And they need to be able to trust that data. They need to trust that the books aren't being manipulated, that there aren't big mistakes happening here, that the business owner isn't going in and making changes. They need to know that the bookkeeper is doing the work right, doing it well, and they can trust that data. Now, the other thing you can do to avoid a big tax bill, like an unexpected one, is don't cheap out on your accountant. I tell our clients this all the time. When you just started your business, you might download a legal template from someone's website for maybe a couple $100. When your business is doing $2 million a year, you better not be doing legal templates anymore. You better have a lawyer, right? You need to hire a decent lawyer. As your business grows, you need to up-level the people that are supporting your business, whether they're contractors, employees, agencies, whatever it may be. And the same thing goes for your accountant. Again, I think a lot of business owners think that all accountants do the same quality of work and do the same thing. So it's just a matter of finding the cheapest accountant you can, because, the only thing that matters is price, because you're going to get the same experience no matter what. And that couldn't be further from the truth. Now, don't get me wrong. There's accountants that charge a lot of money and do very mediocre work, but you won't have any chance to really save money on taxes and be prepared for your tax bill if the only thing you're doing is looking for the cheapest accountant you can find. If your business is growing, especially if you are getting into 6 figures in profit, not revenue, but getting into 6 figures or multi-6 figures or even 7 figures in profit, that's where investing in upgrading your accounting support can supply a really, really healthy ROI. Now, the other thing you could do to make your tax bill a little less of a surprise is paying your quarterly taxes. So if you're waiting until the end of the year to pay one big lump sum on your tax bill, which if you are doing that, you're probably incurring penalties and fees that maybe you're not even aware of, because the IRS will charge you for not paying your quarterlies. Every business needs to be paying their quarterlies if they want to avoid penalties and fees, which those have gone up in recent years because the IRS is really trying to get business owners to take their quarterly payments seriously. So paying your quarterlies is something that Every business owner is 100% capable of doing. You go to the IRS website, submit the payment. You go to your state's website, submit the payment. It can all be done online. What you really need, though, is an accountant that's letting you know at the start of the year what your quarterlies should be, because your quarterly estimate should be based on how your business performed last year. And if your business grows a lot this year, great. Then keep paying your quarterlies based on how your business did last year, and just know at the end of the year, you're going to have to true up your taxes, and you'll have a bigger final tax payment to make in Q4 or shortly after your Q4 payment. But if your business is not doing as well as the previous year, then again, you want to have a good relationship with your accountant to go, hey, I know we set up these quarterly payments based on how my business did last year. My business is actually trending to doing worse. Should I pay less for my quarterlies? And that's something your accountant can help you with. But your accountant should really be there to help you dictate what your quarterly payment should be. There's a calculation they can do to help you figure out what you should be paying each quarter. And that way you're paying your tax bill in chunks throughout the year, instead of waiting until the end of the year and wondering, oh boy, I hope I saved enough money for my tax bill. And that's where an engaged accountant can really be helpful, is to not only at least with our clients at Evolve Finance, not only calculate what their quarterly estimate should be for the following year, but also just helping them stay on track with that, helping them track what they've paid in quarterlies, accounting for that in their tax bill estimate as we do a mid-year estimate for them. So there's a lot. This can be a lot less stressful if you are paying for an accountant that is really engaged in the tax process with you throughout the year and not just waiting until the end of the year. But then the other thing you can do is engage with your accounting team. We definitely have our clients at Evolve Finance that they reach out to us a lot. They have questions. They're wondering where we're at in the process. And that's great. I think with our accounting firm, we really try to be proactive and ahead of our clients' needs. And that's why we're very process oriented and very systematized, so that our clients don't have to worry about where we're at in the process. But we still have clients who are like, they jump on any requests we send them. They answer our questions really quickly. They send us stuff as it comes in the mail, if it's from the IRS or the state, and they're really engaged. And those clients tend to have a really good accounting experience and tend to never be surprised by their tax bills because they're engaged with their accounting process. But if you're someone that doesn't get back to your accountant's emails or your bookkeeper's emails, and you're always putting them at the bottom list of your priorities, well, that's a surefire way to get a big surprise tax bill, because your accounting team is trying to get what they need from you in order to support your business and do their work well. But if you don't engage with them and respond to them in a timely manner, then you're setting them up to fail, which is really setting you up to not have the financial visibility you need, to not know how much you're going to owe in taxes, which could subsequently put you in a really tough financial situation. And especially if you have a good accountant, like at Evolve Finance, if our clients are engaging with us, they're going to have a phenomenal experience. I'm sure there's other accountants out there that do the same thing, but that's a great way to make sure you are prepared for your tax bill. Can you reach out to your accountant and ask questions, and are they responding, and are you getting back to them when they're asking you questions? This is a relationship much like a doctor or a mechanic or a dentist. Or even your hairstylist, right? This is a relationship that the more you put into it, the more you're going to get out of it. And again, I just don't think there's a lot of businesses out there who engage with their accountant really well that gets surprised by a big tax bill. And if they do, that's very likely their accountant's fault. They're not communicating well. They're not delivering on what they're promising, and the client is doing everything they can to set themselves up to win, but it's rare. Most accounting firms are chasing clients down to try to get them to respond to emails and get what they need. So one of the best things you can do for your business is just engage with your accountant, get them what they need, and set them up to win so you can win as a result of that. So that's it. I just laid out. It is very simple in terms of what you need to do to avoid having a surprise tax bill. But again, take your bookkeeping seriously. Don't cheap out on your accountant. Pay quarterly taxes and engage with your accounting team. Don't ghost them. Don't avoid them. They are on your side and they can really help you to keep more money in your pocket throughout the year. It's one of the best ROIs you can get is from the investment you make in a good accounting team. So if you are looking for a good accounting team to give you industry-leading bookkeeping, industry-leading tax planning and tax compliance, then check us out at evolvefinance.com. We would love to chat with you and see if your business is a good fit for our firm and vice versa. And if you want to learn more about building a more profitable business and learning how to take the financial side of your business more seriously and do it in a really simple and clear way, then check out my book, Profit Pillars. You can find it anywhere books are sold online. But as always, thank you for watching. Thank you for listening. I'll see you in the next episode.